Hello friends, warm welcome to my another video on debenture. Okay, the topic is very simple. It is also very important for all examinations, including PSC, KAS, and UPSC examinations, and also BA degree examination programs. Okay, see here I would like to discuss the meaning and the definition of debenture. You may feel it is really very difficult topic, but it is not like that. It is very simple topic. Do you believe both debenture and bonds are same? Okay. See, we have discussed the shares, different types of shares and so on as a part of capital market instruments. Okay. See, debenture or bond, that is also come under capital market instruments. That is very important point. As in the case of shares. Okay, shares also come under capital market instruments, not money market instruments. Okay, treasury bill, commercial paper, and other instruments that are come under money market instruments. Here the topic like debenture or bond, that definitely come under capital market instruments. But here we need to understand some particular points. See, debenture or bond, that is creditorship instruments. Okay, not ownership instruments as in the case of shares. Okay, shareholder actually enjoy the ownership of the company, they have voting rights. But in the case of debenture or bond, they are actually creditors of the company, or they are the lenders of the company. That is the correct lenders or creditors. That is why debenture and shares sometimes known as creditorship instruments. Okay, now here the important question is that what is debenture or what is bond? See, in India, I think debentures and bonds are interchangeably used. There is no much difference between debenture and bonds in India. But in the USA, we can see some differences between debentures and bonds. Okay, a debenture, that is in some terminology aspect, debenture is unsecured instrument and bonds are secured instruments that we will discuss. But here I would like to give you a keyword to understand the distinction between debenture and bond in Indian context. It is very simple way to digest the points. Okay, for example, debenture is the debt instrument or loans that is actually issued by the private company. Okay, suppose Reliance Industries or Reliance Company or Tata Industries, they actually want to mobilize fund for expanding their investment. Suppose they want to modernize their companies, they want to install sophisticated machineries. Definitely they need fund, no doubt. See, for example, they can use their own fund, no problem. That is the promoters of the company, they can use their own fund, no problem. And otherwise, they can also mobilize fund by issuing shares. That means they are actually selling the ownership of the company, that we have discussed. You must watch the previous videos, and my request is that you can also subscribe my channel, Noushad Chengodan. Okay, I will upload new videos related to economy and other aspects. Okay, right. See, so my point is that Reliance Company, they can mobilize fund through own fund or mobilize fund by issuing shares. There is also another method, they can mobilize fund by issuing debentures. That is also very important. See, in the case of debentures, they are actually mobilizing fund as loan. And the investor, suppose I would like to invest in debentures. Suppose I am the investor and Reliance is the issuing company. Got it? Reliance is the issuing company and I have invested 1 lakh. I am the investor and Reliance Company is the issuer. Then Reliance Company will issue a certificate to me. That is certificate is known as debenture. Why? Here the private company is the issuing company, and that is why it is known as debenture, and the certificate which shows the evidence of loan that mobilized by the company. When I return that certificate, I will get the principal amount along with the rate of interest. That is very important. Okay, so in the case of bond, that is issued by government. That is the best way to understand in a simple manner. Bond is the instrument that is issued by government. And in the case of bond, they are the creditors of the company, and company or government acknowledging that they actually borrowed fund. And in the case of debenture, the company will repay the principal amount after a maturity period, say 5 years or 10 years, or they will also pay regularly the rate of interest. That is, debenture holder will get the rate of interest as the return, but in the case of shareholder, he will get the dividend as the return. Okay, there are lots of points. And also, what are the major differences between shares and debentures? Share, ownership of the company. Debenture is the creditorship of the company, and there are lots of examples are there. Okay, anyhow, now we can discuss all these topics along with slides. Let us see slides.
Okay, so we have ownership capital market instruments as well as creditorship capital market instruments. What are the instruments come under ownership capital market instruments?
Yeah, shares or stocks,
What about the creditorship instruments?
debenture or bond.
Okay, fine. Now, we can simply say shares, that is, capital market instrument involved in the category of ownership securities or capital stock of the company. You can underline that word, ownership securities, that we have discussed. You can watch the previous videos. Or, capital stock of the company. Okay, then what about creditorship securities?
The capital market instruments like debenture and bonds belong to the category of creditorship securities or debt capital of the company.
Okay, now we can simply consider, see the meaning of debentures. See, debentures and bonds are types of debt instruments that can be issued by a company or government. Okay, in some markets like India, the two terms are interchangeable, but in the United States, they refer to two separate kinds of debt-based securities. Okay. In the USA, for example, bonds are secured by tangible physical assets of the company. I would like to repeat that point. In the USA, bonds are secured by tangible physical assets of the company, and debentures are secured only by the general creditworthiness of the company. That is the slight difference between bonds and debentures. Bonds are secured debt instruments, but debentures are unsecured debt instruments. What is the meaning is that, suppose a company, for example, we can take a Tata Industry, that company issued debentures. And due to many reasons like economic crisis or slowdown, Tata Industry has declared bankrupted or bankruptcy, or Tata Industry became insolvent, paparai, kadakkaniyilai. Suppose if it is debenture, the debenture holder cannot sold out the asset of the company. ഇതുപോലെ ഇപ്പം ഞാൻ വായ്പ എടുത്തു, ഞാൻ ബാങ്കിൽ നിന്ന് വായ്പ എടുക്കുന്നത് എൻ്റെ ക്രെഡിറ്റ് വർത്തിനെസ് മാത്രം വെച്ചിട്ട്, കാരണം വീടിൻ്റെ ആധാരോ ഗോൾഡോ ഒന്നും പണയം വെക്കുന്നില്ല, സെക്യൂരിറ്റി ആയിട്ട് ഒന്നും വെക്കുന്നില്ല. അപ്പം ഞാൻ പാപ്പരായാൽ ബാങ്കിന് എന്താണ്, എൻ്റെ അസറ്റോ അല്ലെങ്കിൽ ഗോൾഡോ വിറ്റിട്ട് ആ ലോണ് തിരിച്ചു പിടിക്കാനുള്ള കപ്പാസിറ്റി ഇല്ല. ദാറ്റ് ഈസ് ദ കേസ് ഓഫ് ഡിബഞ്ചർ. ദാറ്റ് മീൻസ് ഡിബഞ്ചർ സർട്ടിഫിക്കറ്റ് ദാറ്റ് വിൽ നോട്ട് റെപ്രസെൻറ്റ് എനി അസറ്റ് ഓഫ് ദ കമ്പനി. ഇറ്റ് ഈസ് അൺസെക്യൂർഡ് ക്രെഡിറ്റർഷിപ്പ് ഇൻസ്ട്രുമെൻറ്റ്സ്. ഓക്കെ, കമ്പനിയുടെ ഒരു അസറ്റും സെക്യൂരിറ്റി ആയിട്ട് അവിടെ പരിഗണിക്കുന്നില്ല. ഏതിൽ? ഡിബഞ്ചറിൽ. വി വിൽ കൺസിഡർ ഓൺലി ക്രെഡിറ്റ് വർത്തിനെസ് ഓഫ് ദ കമ്പനി, ദാറ്റ് ഈസ് റീപേയ്മെൻറ്റ് കപ്പാസിറ്റി ഓഫ് ദ കമ്പനി. And the credit rating that may be assigned by the credit rating companies like CRISIL and so on. Okay, we can discuss all these topics in the coming videos. And another point is that in the case of bond, it is secured. That is the major element. Secured means company default നടത്താണ്, പ്രിൻസിപ്പൽ എമൗണ്ടോ റേറ്റ് ഓഫ് ഇൻട്രസ്റ്റോ കൊടുക്കാതെ ഡീഫോൾട്ട് നടത്തിയാൽ അല്ലെങ്കിൽ ബാങ്ക്രപ്റ്റഡ് ആയാൽ കമ്പനിയുടെ അസറ്റ് സോൾഡ് ഔട്ട് ചെയ്തിട്ട് ഈ വായ്പ കൊടുത്തിട്ടുള്ള ആളുകൾക്ക് എന്താണ്, ആ ഫണ്ട് അവർക്ക് തിരിച്ചു പിടിക്കാൻ പറ്റും. ഓക്കെ, യു ഗോട്ട് ദ പോയിന്റ്. ദാറ്റ് ഈസ് that is actually the slight difference between debenture and bond. But in India it is not like that. In India we can simply say government debt instruments in capital market is known as bond, and debt instruments that issued by the private company is known as debenture. Very simple point. Okay, so debenture is not secured by the physical asset of the company. Please underline that point. Debenture holders are the creditors of the company that we have discussed, and hence they have a voting right in the company. As usual, bonds are the debt instruments secured by the physical asset of the company. Okay, now we have mentioned that debentures are never asset backed. That means they are not secured by any collateral and are only backed by the credit of the issuer, that is credit worthiness of the issuing company. Okay, then can you say something about debenture?
A debenture is a debt instrument which is not backed by any specific security. Instead, the credit of the company issuing the same is the underlying security.
Okay, now we can move ahead.
Excuse me, sir, I have a question. Can you explain more about the secured and unsecured instruments, please?
Okay. The debenture certificate actually, are issued under the common seal of the company. That is, the debenture certificate is a document which certifies that the holder is the creditor of the company. Okay. Got it? The holder is the creditor of the company. That is, debenture is the evidence, or debenture is an evidence of the debt or acknowledgement of debt or borrowing by a company. Now, we can simply say secured instrument means if the company make a default, the debt holder or the person who invested in that security, he will get the return by selling the asset of the company. A company asset വിറ്റിട്ട് ഇവരുടെ ഫണ്ട് തിരികെ പിടിക്കും. അൺസെക്യൂർഡ് എന്ന് പറയുമ്പോൾ ദർ ഇസ് നോ അതർ ഓപ്ഷൻ. ഒരു കമ്പനീൻ്റെ അസറ്റ് കാര്യങ്ങളൊന്നും എന്താണ് സെക്യൂരിറ്റി ആയിട്ട് വെച്ചിട്ടില്ല. ഐ തിങ്ക് യു ഗോട്ട് ദ പോയിന്റ്. നൗ see, when a company decided to raise loan from the public, the amount of loan is divided into units of equal value. These units are known as debentures. The term debenture is derived from the Latin word debere, that means to owe. Okay, or sometimes it is loan or borrow. It is a Latin word. Okay, that is a little bit about the history of debenture. So a debenture is a document or certificate issued by a company under its seal to acknowledge its debt. Those who invest money in debenture are called debenture holders. Please understand the concept. If you know the concept, this topic is very, very simple. Okay, from the term itself we can understand the very meaning of the company. That is the beauty of economics. Don't be confused, don't be panic. It is very simple. See, those who invest money in debenture are called debenture holders. That is, investor. The company is known as, issuing company. They are the creditors of the company that we have mentioned. Debentures are therefore called creditorship securities. Okay.
What are the major differences between shares and debentures, sir?
Okay, that we can discuss, in a simple way. For example, from the slide you can see on the left side shares and right side you can see debentures or bonds. In the case of share, the first point is that shareholders are the proprietors of the company, or simply owners of the company. Then what about a debenture holder?
They are the creditor of the company.
Yeah, debentures, they are the creditors of the company. That is the first difference. Okay, we have already mentioned, in the previous video that shares, we know that shares are the smallest part of share capital. Okay, but debenture, is a document given by the company as an evidence of debt to the holder. Okay, that is, a debenture is an acknowledgement of a debt. Then, what about the second difference between share and debenture? We can see shareholder will get the return in the form of dividend. Then what about the return of debenture holders?
Return is in the form of interest.
Yeah, that is very interesting point. That is, shareholders are paid dividend on the shares held by them, but debenture holders are paid interest on debentures. Okay, then another interesting point is that the rate of dividend depends upon the amount of divisible profits and policy of the board of directors. That is, shareholders will get the return on the basis of the performance of the company. That is very, very important. If the company having high profit, shareholder will get maximum return. If the company is in loss, they will get nothing. Okay, so the performance of the company is very, very important in the case of equity shareholders. Okay, that we have discussed. But in the case of debentures or bond holders, a fixed rate of interest is paid on debentures irrespective of profit or loss. Okay, the return of debenture holder, that will be, or that will not be on the basis of the financial position of the company or the health of the finance of the company. Okay, company better ആണെങ്കിലും loss ആണെങ്കിലും that will not affect the return of the debentures. The yield of the debenture holder is fixed and it is non-volatile. There is no fluctuations in the return of debentures, but there is a possibility of fluctuation or volatility or change in the return in the form of dividend to shareholders. Okay, then share, that is appropriation of profit that we have mentioned, but in the case of debentures we can see that is charge against profit. And in the case of shares, it is always unsecured. There is no guarantee. They are actually one of the owners of the company. Shareholders or share certificate, that is unsecured. But debentures mostly secured. It is more safe, less risk, and they can ensure fair return. Okay, but in the case of shares, they are it is actually unsecured, and their rate of profit or the profit or yield may be varied or some problem is there. And in the case of shares, they have the right to attend meeting and they have the voting right. Okay, but in the case of debentures, they have no voting right, and there is no possibilities or chance to attend in the board of meeting and so on. That is also a very important point. That is, shareholders have voting rights. They control over the management of the company. They are the owners of the company. But debenture holders,
they are only creditors of the company. They have no say in the company.
Okay, that is also very important point. You can note that point. And next difference, sixth point we can see, shareholders, they can claim loss in the case of capital. Suppose if company decided to wind up, then the shareholder will get his principal amount or capital or share only a residual part. ബാക്കി ഉള്ള ഡിബഞ്ചർ ഹോൾഡേഴ്സിനും പ്രിഫറൻസ് ഷെയർ ഹോൾഡേഴ്സിനും അവർക്കൊക്കെ കൊടുത്തതിൻ്റെ ബാക്കി ഉണ്ടെങ്കിൽ മാത്രമേ ഷെയർ ഹോൾഡേഴ്സിന് അവരുടെ ക്യാപിറ്റൽ തിരിച്ചു കിട്ടുള്ളൂ. ബട്ട് ഇൻ ദ കേസ് ഓഫ് ഡിബഞ്ചേഴ്സ് വി ക്യാൻ സി ഫസ്റ്റ് ക്ലെയിം എമൗണ്ട് ഓഫ് ക്യാപിറ്റൽ. ഓക്കെ, and these are the major differences between shares and debentures. And another point is that shares are not redeemable, with the exception of redeemable preference shares during the life of the company. That is also very important. Shares are not redeemable. Shares and ഇപ്പോൾ 5 ലക്ഷം രൂപ ഒരു കമ്പനിയുടെ ഷെയറിൽ ഇൻവെസ്റ്റ് ചെയ്തിട്ടാണെങ്കിൽ ആ കമ്പനിയുടെ ലൈഫ് പീരീഡിൽ അഥവാ കമ്പനി വൈൻഡ് അപ്പ് ചെയ്യാത്ത അവസ്ഥയിൽ ഒരു കാരണവശാലും എന്താണ് ക്യാപിറ്റൽ തിരിച്ചു കിട്ടില്ല. എപ്പോഴും അവർക്ക് തിരിച്ചിട്ട് കമ്പനി ലിക്വിഡേറ്റ് ചെയ്യാണ് ഓർ കമ്പനി വൈൻഡ് അപ്പ് ചെയ്യുമ്പോൾ മാത്രമേ കിട്ടുള്ളൂ. അത് തന്നെ എന്താണ് ബാക്കിയുള്ള ക്രെഡിറ്റേഴ്സിനൊക്കെ ഫണ്ട് കൊടുത്തിട്ട് ബാക്കിയുണ്ടെങ്കിൽ മാത്രമേ ഷെയർസിന് കിട്ടുള്ളൂ, ഷെയർ ഹോൾഡേഴ്സിന് കിട്ടുള്ളൂ എന്ന് മനസ്സിലാവും. ബട്ട് ഡിബഞ്ചേഴ്സ് ക്യാൻ ബി റെഡീംഡ് ആഫ്റ്റർ എ സർട്ടൻ പീരീഡ്. ഫോർ എക്സാമ്പിൾ in the case of debentures there is a fixed rate of interest, and another point is that debenture there is a maturity period, a tenure. For example, dated government securities, that is normally the fund repaid after 10 years. Okay, sometimes the company issuing debentures for 5 period. That means the debenture holder will get the principal amount after 5 years. At the same time, the debenture holder will receive or get interest rate regularly, maybe quarterly or half yearly or annual basis or yearly. Okay, and at the time of liquidation of the company, share capital is payable after meeting all outside liabilities that we have mentioned. Debentures are payable in priority over share capital. Okay, so we need to understand all these points. So far we have discussed debenture and bond, and also what are the major differences between debenture and bond, that is secured instrument and unsecured instrument. And after that we have mentioned the major differences between shares and debentures. This is very important topic and crucial for you. You need to understand and all this area. Can you ask anything?
What about the next topic, sir?
Yeah. Okay. In the coming video, I would like to explain, types of debentures. That is also very important, or types of bonds. For example, convertible bonds, non-convertible bonds, SLR bonds. Then similarly, redeemable debentures, non-redeemable debentures, and recently we have noticed the points like masala bond. That is also very important point. So we need to understand all these things. Okay. In the coming video, I would like to explain major types of debentures or bonds, and you can subscribe my YouTube channel Noushad Chengodan, and you can also watch all these videos and the previous videos, and you can also visit my website noushadchengodan.in, and you can also refer to my book, see Economics of Capital Market, and as well as banking too, and all related areas. Okay, thank you, all the very best, happy learning, stay safe.
Thank you, sir.